Thank you, Hitesh. I think it's an exciting topic, and when I read that title of the topic, I felt that 100 seems to be like a very small number. We probably will achieve it in the next year or so. I would rather just wear my entrepreneur hat and think of that growth hacking that we've got to do to maybe think of 1,000 companies from India, which are digital native companies, and what's the roadmap for them. More importantly, I think if you look at what's been happening with respect to India's playbook around digital public infrastructure, which has actually been the foundation for a lot of these companies. What are you seeing differently that you saw 10 years ago? And how is it kind of providing the tailwinds for some of these businesses to actually go to market faster? Maybe we could start with that and just your reflection on some of these.
Yeah. Thank you. I'm glad to be here. We started on our startup journey more than 25 years ago. It was a very different India back then. There was hardly any venture funding available, and there were no smartphones, and there was maybe 2G, and people used to use modems to access the internet. Fast forward, and we got funded in 2000, and after we got funded, there was a dot-com bust. We were called dot-coms then. And there was a dot-com bust, and after that bust, almost no money was available for any company or any startup for a long time. And the companies you hear of and see today, the Zomatos and Policy Bazaars and Flipkarts of the world, I think most of them got funded around 2008, right. 2009. Right. Again, they were pre-smartphones in that sense. But fast forward a few years, and by maybe 2011, 12, 13, there was a smartphone revolution. Then we had 4G, 5G, till the time there were no smartphones, penetration perhaps peaked at internet penetration about 70, 80 million users, and didn't go beyond that. And now we are sitting in an India where there are maybe 700, 800 million people on the internet. The number will probably hit 1 billion users in a few years. There's a whole VC ecosystem. Maybe 800 to 1,000 deals happen every year. And there is about 20 billion dollars invested in startups every year. According to the government of India, there are over 100,000 startups. And of course, you also have the India stack, right? And that sort of ensured that the internet is now mainstream. So everybody's on the internet, thanks to WhatsApp and Paytm and the other sort of UPI apps. My maidservants, my drivers, the dhobi, everybody you can think of is now using the internet. And it's not just one of the things they're using, it's actually a big part of their lives. The media they consume, everything, commerce, even they've started sort of doing stuff on the internet. And they're just not consuming, they're sort of putting out videos, they're buying things on the internet, which was unimaginable a few years ago. So I think what has happened over the last 8, 10 years is that the digital economy has become mainstream. And it's how most people in India, I think I won't be surprised if most people in India spend at least 3 to 5 hours a day, if not more, on the internet, right? And where attention goes, business follows. So it's first about getting users, then it's about getting them to spend more time, and then after that, they start transacting and commerce follows. So I won't be surprised, and I've seen some reports that the digital economy could be 15, 20% of the Indian economy in the next 5, 7, 8 years. And I think that's very, very doable. So a lot has changed. And even from our startup standpoint, mentorship, funding, it's easy to get employees. Back then, it was hard to get people to work in a startup. Today, people would rather work in a startup than anywhere else, right? So talent is also easily available. It's a preferred sort of thing for a lot of people graduating from college. There's startup activity in almost every industry, right? So it's become so deep now. And it's not just about Bangalore, it's like, or Delhi, or Gurgaon, or Pune, it's now, every small town has a few startups, worth talking about. So it's increasingly mainstream.
Fantastic,
Yeah.
fantastic. In fact, as a business, we work in multiple markets. The DPI infrastructure that we have is actually the magic hand that is doing a lot of this, right? When you go, so we do business in markets like Egypt and all. We see the gap that exists. I think those markets will take 10, 15 years to catch up to where India is today. To a large extent, we will, you will value the shade only when you are in the hot sun.
Yeah.
So therefore, I think the DPI has been this whole, big stimuli in kind of propagating the whole digital economy.
Not just the, the emerging markets, but even advanced economies.
Sure.
I went for a holiday to Japan last year. I thought, they were maybe 10 or 20 years behind on payments. That's what I felt.
Yeah, a lot of friends who come from US, for example, in the winter break, they're saying for 10 rupees and 20 rupees now, the vendors don't prefer cash, because if I'm let's say a tender coconut seller, I've got to stop doing my danda to collect money.
Yeah.
But when you pay UPI, it's actually in a sound box, so you know that the money is kind of coming, right? It just helps him to sell more, right? On that note, I think there's also this, in the last couple of years, we've seen public markets kind of adapt to even loss-making companies, right? Which was not the norm. We've always seen this as, if you are a, cash-generating business, Indian public markets, reward you handsomely. And you've had, front row seat to basically see some of these companies, in their own right, they've, executed tremendously well. But do you feel that this is coming of age of the public markets to really value companies beyond just the financials, which is very important from a public market standpoint, but the underlying business model, understanding, maturity, do you see that like more pronounced, if I may use that term?
No, absolutely. So again, we went public almost 18 years ago. And at that time, there was very little understanding of how internet companies worked and of internet business models. So we were told that, you will have to sell your IPO over abroad. So, we did road shows in Singapore, Hong Kong, London. We went to all these places to sell our IPO. Because in the domestic market, we were told, yeah, you are like another IT company. So why should your multiple be higher than Infosys? Because Infosys was seen as the big IT sort of company, giant in those days. So there was very little understanding of internet business models and how internet of platforms back then. But today, I think, there's because there's wide acceptance. Indian markets have also grown. See, the Indian economy is now a $4 trillion economy, right? It's a huge economy, growing at 6-7% in real terms per year. Fast forward 8-10 years, it'll be a $8-10 trillion economy depending on how fast we grow. So it's become a bigger market, a much deeper market. There are at least 20, or 18 to 20 digital tech new age companies that have gone public. There's, I think now, very sound understanding of how internet companies work and their business models. And not just internet. Now people understand, okay, B2B is different from B2C, is different from SaaS, is different from, and so on and so. So, we are covered by a lot of analysts, and some of the companies in our portfolio, we've also been prolific investors in startups. So at least Zomato and Policy Bazaar also went public some time back. And when they went public, they were not making money, right? So I think markets have understood how to value companies. And there's a lot of appetite, I would say, in fact, right? Because the reality of the market is, of the public market is, there may be some 5,000-7,000 listed public companies in India. Maybe there are a few thousand, maybe 5,000 which have a market cap of, let's say, more than 2,000 crores. But the number of companies in India which are growing at more than 30% per annum, maybe you can count, maybe it's less than 100, or maybe it's less than 50 even, right? So the market is actually hungry for high growth companies, right? And if a high growth company also makes money, then nothing like it, right? So there's a lot of appetite, at least today, for high growth companies because the traditional sort of sectors are slowing down. Right? So if you look at the results of the last 4, 5 quarters, you'll find that traditional FMCG companies, banks, etc., low single-digit growth. It's the newer sectors, and of course, tech is new, and startups are new, but also the other sectors, like there are some manufacturing companies, some infra companies, some new age different types of companies, where growth is very high, and they are the darlings of the market. So the app market has also changed. There's much more domestic interest, right? So many of these companies which go public today, you have the regular mutual funds investing in these companies, Indian mutual funds. SIP, we all hear about SIPs and how SIPs have grown, how 30, 40,000 crores is now sort of being pumped into the market. Even though FIIs are selling right now, SIPs are keeping the market afloat. So the nature of the beast has changed. I don't know for how long. Okay, maybe it's temporary, maybe it's permanent, but there's a lot more understanding. The market now has understood how these companies work, how these companies should be valued. They understand that if it's a high growth company and if it's a market leader, it's only a matter of time before they'll make money, right? And to add to that, I would say one more thing. See, the platform companies have also shown that the businesses they are in can be really large, right? And they have been innovating constantly. And every time, and even some of the new things, we are sort of hearing about, like AI, for example, are all sort of pluses for them. Because these are companies that have a lot of data, and to do AI, you need data. So these platforms, a lot of investors feel, will only get stronger with time, and they'll be able to do a lot more. And therefore, not only are they growing rapidly, today they can continue to grow for a long time if they execute well. And such companies are hard to get in the public market.
Interesting. Yeah, I think you touched on AI. No discussion goes out without AI coming into the mix. But I think truly some of these large companies, their ability to compound will be much higher because of sheer fact that they are executing at such a fast pace. Shifting gears to maybe the topic itself, when you look at companies that are basically looking to go public, right? What does the prep look like? How far before these organizations have to really think of getting the house in order? Things like, the teams that you had, the guys who got you to that point may not be the ones who will actually help you get to the next level. And oftentimes it is said that, public markets, you are basically, scrutinized every day.
Yeah.
So therefore, how have you seen companies adopt to this? Are there any common pitfalls, that entrepreneurs have to kind of keep a lookout for?
Yeah, see, what my recommendation to companies who are looking to go public is this, don't go public unless and until you have a stable, predictable operation, right? Because that's what public markets value. You don't want to miss your numbers or your forecasts when you go public, because public markets can be brutal and they tell you the price every day, unlike private markets, right? It takes, so once you've sort of gotten to a point where you can predict what the next 1 or 2 years are going to look like, you have certainty of revenue, let's say have a model which is, working well, then I think one can think about, I mean, it should not be the case that you will be loss-making forever. If you're a loss-making setup, you know that you will be profitable, if not in a year, maybe in 2 years or 3 years. I think that's when you can think about going public. That doesn't mean that you should go public, but that's when you should start thinking about going public. And what I think founders need to understand is that to go public is a journey. So the process can take, to get ready as a company, it could take a few months. You need to beef up the finance department, you need to beef up your compliances, you need to get your accounts in order. You will need to beef up your management team, because if you would want to go public as a company, the founder will have to spend a lot of time marketing the company, right? Not just before IPO, but even after IPO. Every analyst, every investor will want to meet the founder only in the beginning, right? So that can take a lot of time, and it can distract you from your business. So unless and until you are sort of certain that, I have a team which can do the job, it can be premature. And like I said, if you miss your numbers, then the markets can reward you or sort of punish you very brutally as well. So, and then once you decide to go public and you, let's say, hire bankers, and then that whole process can take maybe 8, 9, 12 months. So it's perhaps 1 year of prep or 6 months of 8 months of prep before you decide to go public, and then a 9-month journey once you decide to go public. So the whole thing can take about 1.5, 2 years. And then, of course, the markets have to be supportive at that time as well.
True, very true.
Yeah.
And, if you really look at some of the narrative that is being said, right? Like there is this reverse flipping that we see in a lot of companies that set up when they were very young. Maybe, I participated in YC, which forced me to actually incorporate in Delaware. And we see a lot of companies paying through their nose in terms of the taxes to reverse flip to India. Is this because Indian markets value the underlying business better? Is there just better liquidity that is available? Or is it more a question of Indian markets will appreciate the fact that this is made for India business? Now the public markets also have a fair understanding of that, or it's a combination of both, right? Like,
it just doesn't make any sense in my view to list overseas. If your customers are in India, if you're an Indian company, an IPO actually builds your brand, right? So when we went public in 2006, the IPO really helped. It made Naukri, it got us a lot more respect with our clients. There was a lot of buzz around the brand. It made it easy for us to hire employees in India because everybody heard of Naukri, et cetera, et cetera. So I think, and plus our customers are in India, business in India, why would I want to go and list in the US or anywhere else for that matter? I mean, you don't see any US company listing here or any European company listing in the Indian market. So that's point number one. So I just don't understand why companies would want to list overseas. And especially now, given that the Indian market, the valuations you get here are comparable, if not better, to what you get overseas, right? Number two. Number three, what we need to understand is that the US markets are very, very large, right? It's a $40 trillion stock market. So, if you're a big IPO, you are still sort of maybe, and if you're a big company, maybe you're a $10 billion plus company, you'll still get coverage and interest. But if you're going to be a tiny IPO, for example, to start with, like if let's say you want to do a $300 million company, it's possible to go public in India, right? And you will still get coverage, and there'll still be interest. But if you try and take a $300 million company or even a $1 billion company public in the US, it's not going to be easy. You may not get any coverage. You may not get any investor interest. So plus compliance, is harder and more expensive when you list in the US. So it's not really, so I don't see any major benefits of listing in the US anymore. But I see a lot of advantages of listing in India. So that's our recommendation to everybody.
Interesting. Yeah. So we'll probably see more of the flips happening, and the exchequer is going to be happy with the taxes that comes with it. There's also this perception that a lot more companies are hitting the public markets because late-stage growth capital has virtually dried up. How do you see that, right? Is that, it's not fair to basically tell a company that they're going public just because capital is not available, but, and there's a lot, you just alluded to the fact that there's a lot of prep and work that needs to go in for that company to even be a candidate for actually thinking of tapping into the public markets. Is that just a, feeling that we get from the media? Is that a wrong soundbite that, people are picking up? Because the euphoria around public market is just not slowing down, and the tailwinds are not there.
So I've seen all kinds of markets, and I've seen markets where the private market used to value companies maybe 4 or 5 times of what they could have got in the public market. And perhaps in today's market, the public market is valuing companies higher than the private market, right? Because like I said, there's hunger for high growth companies. But I think, on the whole, it's not about whether you see, a good company will be able to get capital, always, right? There's never a shortage of money for companies that are doing well, right? So you can raise money in the private market, you can raise money in the public market if you're doing well. I think what should guide your decision is whether you're ready for the public market, because it's an irreversible decision. Right? Once you go public, you can't go unpublic, right?
Unless you're Elon Musk.
Right? And that also may not be possible in India. No. The Indian markets are different. So, and then you are, like I've done maybe more than 50 analyst calls. Every quarter, you have to do an analyst call. And, have to deliver what you commit, right? Because if you overpromise and underdeliver, public markets can be punishing, right? So you should be ready as a company to go public. Like I said, you have to have a stable setup, you have to have predictable revenue, you should be able to deliver for the next 4 or 5 quarters. You can't disappoint the market once you go public. On the other hand, if you're still figuring things out, if you want to, grow rapidly, try out new things, and if you think, and if you're doing well, you can easily raise money in the private market. So I think, so that is what should guide your decision, not whether today the public markets are giving you good value versus the private market or not.
Yeah, I mean, I think if you take a venture-backed business,
Yeah.
The road to public market is that you almost have like a semi-final in a PE coming
Yes.
and sitting and actually making those things, like delivering quarter on quarter. The discipline on the rigor
Yes.
of
Yes.
the public market, you are almost tested with the PE guys who typically do that. That was where I was kind of coming to that. Some of them are skipping that PE window because public market is more enticing and probably they're accelerating that road to the public market itself.
Yeah, so I don't think, that companies have to raise money from. See, if you are confident of being able to deliver your numbers, you don't need a PE to sort of, help you with that, right? If you are running a good business yourself. And many companies do a pre-IPO round, right, to sort of set the valuation, right? And in that round, they often get in other investors, not because they need the money, but just to set the valuation. And this also ensures a firm allotment for the investor coming in. So that's a good strategy. But I don't think, companies necessarily need to get PEs on board before they go public. We didn't do that, and I can give you lots of other companies which haven't done that, names of lots of other companies. And they've had successful IPOs and they're doing well. Yeah.
You touched on this, Hitesh, just a while back. Do you see India delivering in the next 2-3 years 5 decacrons or 20 $500 million companies, right? Like
Both.
Okay, both.
You'll get both.
Interesting.
You'll get both.
Very interesting. And if I can ask you, you actually already answered it, right? Between India and foreign markets, even if you have a substantially foreign income, is there a driver, like, because you're earning in dollars, markets will value differently if you're listed outside?
So, how many of the big Indian companies today are listed overseas? You have, not even the IT service. Even the IT services companies, maybe they have ADRs, right? And all the business is overseas, right? And they're still valued richly here, and they're still doing well, right? Why complicate life is my question, right? Why complicate your life?
One last question before
even if the Indian market is going to give you the same valuation 1 year later, why complicate your life? And expose yourself to all those regulations and compliances which you don't understand sitting in India. Right? There's a risk also.
One last question before I open it up for the audience is, the value of ESOPs for the teams that build these businesses is actually, is the primary driver for a lot of people to actually come into the startup bandwagon, leaving like cushy jobs in a large enterprise. Have you seen that mindset change with respect to investors being open to opening up their purse strings and actually allocating a lot more to ESOP? So it's largely a private company-driven effort. So I, as a founder, decide that I need to keep 10% of my pool as ESOP. But are you seeing this as a norm where more and more companies are saying, I will put more money behind ESOPs?
Yeah, it's, I think, founder-led more often than investor-led. I've seen founders who are today saying, listen, we need to retain these guys, and they've been with us for many years, and we paid them half of what they would have got in the market otherwise. And we want the ESOP pool to be 20%, not 10%, right? But it's very founder dependent. It's also a function of the history of the company and many other things, and who's contributed what. But I think ESOPs are now well understood by, like again, if I go back 20 years, we had to tell people, listen, we didn't have cash, right? Because raising money was not so easy. So we used to offer people ESOP but they would say, listen, we don't want ESOP. We want cash. We want that extra 25,000 rupees a year back then. And then in the end, we often told a lot of people, okay, take both, right? Because who the hell knows, right? So, but I think now there's amongst early employees and employees in general, there's a lot of appreciation because a lot of employees have made money through ESOP. And today there's a secondary market for ESOPs, for some of these companies as well. And so I think as a concept is well understood. And therefore, I've met enough people who say, listen, we would rather take ESOP than take high comp. And we are happy to sort of align our interests with the interests of the company. And, we would rather, make a lot of money, one fine day, right? So I think these things are now well understood. And enough founders also are willing to sort of, and investors also are willing to partake with the...
Yeah, I think the news on the street is that what ESOP grey market, is an indicator for how the listing is going to happen. So I don't know how far it's true. I've not done it, but I've heard people say that. Maybe we open it up for a couple of questions if there's a mic to pass around.
Questions?
I'm sorry? Okay.
No questions.
This one, somebody raised.
Thank you so much for the session. It was very nice. I had one question on ESOP. My company does offer ESOP, and time and again I have been avoiding from, taking that ESOP because it is very uncertain when we'll get listed and how long it takes and what all is going to happen in company in the meantime. So I just wanted to understand how this offering ESOP and how also how we can trust on that factor that going ahead, because we are not engaged in the main management decisions, right? They can change drastically. So to keep a trust on that factor is something very important. So I wanted to understand more because my appraisal is coming. I need to take an ESOP now after I heard you. So just wanted to know more about this. Thank you.
So if I understood the question right, what you were saying is your company has been offering ESOPs. And you don't know whether...
I've been avoiding it up
Yeah,
until
I've been
now.
avoiding
Because
it
you don't
since
know when
past
that
3 years.
liquidity will happen.
Yeah. So what's the harm in taking ESOP?
There is a lot of uncertainty involved in the ESOP factor. One thing is, you don't know how your increment becomes really less when you take an ESOP. They say you're a part of the company.
So like I told you, see, we had this issue 20 years ago. But if you believe that the company is doing well, right? If you think the company, which function are you in?
So I was initially in the AML, anti-money laundering. I was an anti-money laundering specialist in my team. Now, because our entire company is about that, they have put me into marketing, saying, you understand the product well, you do the marketing part.
So listen, my simple advice to people is that nobody knows the company better than the people inside the company, right? And if you are bullish on the prospect of the company, if you are bullish, if you think your company is doing well, it's growing nicely, customers love it, they're going to keep giving you money, and the company will keep growing, then I think it's a bet worth taking, right? It's a bet worth taking. Because on the other hand, if you think everything is wrong with the company, it's not going anywhere, it's not going to make it, and you're also there for the short term, and you're going to be moving out very quickly, then it's a different ballgame, right? A lot of the people who joined InfoEdge 20 years ago, 25 years ago, are still with us, right? And a lot of them were salespeople in the beginning because, we hired a lot in sales. And they could see in the market that there was a lot of, the customers were giving the company good response. They were able to easily get renewals, upgrades, et cetera, and the business kept growing. And therefore, actually, it makes a lot of sense. So if you're inside the company and you think it's doing well, why not bet on it? Because the returns can be phenomenal, right? That's my advice.
Yeah. In fact, just to add to Hitesh, it's about, are you going to stay for a couple of years at least? Do you have personally that outlook and confidence on the company,
Yeah.
right? That's the true test. And the other thing is that it also gives you a currency to negotiate with your future employer, right? If without, it's like money, dormant money that is helping you get better outcomes later. You may not get the liquidity, but if the company organically grows by 2x or 3x, let's say they gave you 50,000 rupees, that suddenly became 2 lakh rupees without you doing anything, right? So which adds to your overall cost, which gives you better leverage to negotiate as well, right? So, yeah, so that would be my advice. Yeah.
Thank you.
Maybe one last question before we wrap.
That's right. We have room for one last question, everyone. Any questions? Let's have you raise your hand. We'll quickly pass the mic to you. Well, if not, I have a question, and this is something I've been also waiting to ask Hitesh. Hitesh, aajkal jo hai, these days, we use the term entrepreneur. Everyone is an entrepreneur, a micro-entrepreneur, solopreneur. But when you started your journey, it was way back around the time when the term was not even available for us to, sort of believe that we could also become entrepreneurs. So I want to understand from you that one aspect that makes an entrepreneur a true entrepreneur, not about the money or not about where the role is heading or taking him or her forward, but what is your understanding that this individual is a true entrepreneur? I'd like to know from you, sir.
Yeah. So in my head, it boils down to one thing: ownership. In your head, you may not own anything in the company, right? But if you own what you're doing, right? I used to work for a company called Hindustan Lever, 27 years or 28 years ago. And I used to feel, even when I was a junior most employee, I was a junior most manager in Hindustan Lever at that time. And I was a fresher, and I was a young recruit. And I used to feel, this is my company, yeah. Right? Even back then. Right? I used to work like it's my company. And I used to own whatever I was doing and, be fully responsible in my head. Yeah, this is, So I think that is the starting point. You have to feel like, if you're an employee in a company, if you own what you're doing, and if you think this is my baby and I'm going to make it successful, then you become an entrepreneur. Call it whatever, entrepreneur, entrepreneurial manager, whatever. So that's one part of it. And if you are, and the second thing I think, and therefore when you think of it as your own company, or as your own baby, as your own project, then you do whatever it takes to make it work, which is the other aspect. You figure out a way to make it work, right? But which comes from ownership.